Hello. Today we're going to be discussing the war clause. It's a highly emotive topic. There have been multiple iterations of war clauses. There's a lot of press coverage which perhaps talks to older versions of this clause, and it can create confusion and perhaps misleading sentiment about how the clause works, whether it's good or bad. Today I'm joined by Lindsay Bauer, who is our cyber product leader at Paragon, to talk about this clause and try and break it down a little bit and hopefully demystify some of the problems, articulate some of the benefits, and leave us all feeling a little bit clearer about what's covered and what isn't. Let's start with the guidance. What does the guidance say?
So the guidance is actually very simple. It has 4 points. The first point is that if a policy doesn't exclude war, that it must exclude war, whether war be declared or not. This means if there's a London excess policy, but the primary excludes war, no additional war language is required. If the primary language is insufficient with regard to war as a risk, the Lloyd's layers must add an exclusion.
If I'm a client and I want to understand whether my assets are covered by this exclusion or not, if there is a war and my assets are in the country where that war occurs, am I covered?
So assets being in a country where there is a war is not sufficient to trigger any of those exclusions. The assets have to be damaged by the war, and in that case, they would be excluded.
What does the guidance actually say?
So the guidance came out a couple of years ago, and it actually says 4 things. 1, that all policies must exclude war, whether war be declared or not. That's not controversial. That's the case for all policies across P&C, with the exception of some specialty markets like political violence. It goes on to say a second point, which is that you must exclude certain state-sponsored cyber attacks, but that they have to have a very high threshold of damage. You have to exclude state-sponsored cyber attacks that either A, results in significantly impaired security capabilities of a state, or which reduces the ability of the state to function as a state. And by state, we mean sovereignty. So pretty high threshold of damage. And then the other points are, just to be clear as to the scope, and use defined terms, and also ensure that there is a robust system for establishing whether or not the exclusion can be applied or not. That can usually be accomplished with a strong disputes resolution clause.
Which is an interesting segue into the concept of attribution. Big topic being debated at the moment. Attribution language removed from the most recent version of the war clause, and obviously in our opinion, is that good or bad? Does it matter? Because it certainly sounds to matter to all the people that were worried about attribution being included in the first place, hence the reason why it was removed. We have a slightly different view on that.
We do. So attribution exists anytime an insurer, or the equivalent of attribution applies, anytime an insurer wants to apply any exclusion. They have to have a reasonable justification for using the exclusion in the first place. So including attribution language was unusual, and some insurers believe it actually increases their burden of proof, but it is a very emotional topic, a subjective topic even. And the good news is that the insured now has the option. They can include attribution language, which has evolved from the original. But I do think that talking about attribution is actually putting the cart before the horses. There's no point in attributing a loss until the exclusion has been applied. And the main thing, the main benefit of these LMA clauses is they can't apply until a very high threshold of damage is met, whereas some of the alternatives can apply instantly on the attack based on the opinion of the insurer as to whether or not their definition of cyber terrorism has been satisfied or not.
The burden of proof. What is the burden of proof under the new war clause?
Well, first of all, the burden of proof to assert an exclusion always falls to the insurer. The insurer has to have a reasonable basis for triggering any exclusion under any policy. Under the LMA clauses, in order to trigger the exclusion, there has to be either war or warlike activities, which is common across the marketplace, or there needs to be a state-sponsored cyber attack that impairs the state's ability to function. These are nationally critical events. So it's a very high threshold of damage. You have to have a material impact to the state's ability to function or compromise state security. the material and detrimental language is causing a bit of a stir. People think it's a material and detrimental impact to an individual company's ability to earn income or to operate as usual. And it's nothing to do with the individual company. The exclusion applies only when the state has an inability to function. And that inability to function is the burden of proof in the endorsement's even higher than their inability to function, which is a really high threshold already. It has to be that they're unable to function because of a cyber attack against essential services. Now, by essential services, we're talking about the energy grid. We're talking about telecommunications infrastructure. We're not talking about a shop or even a single telecommunications company. We're talking about big, massive events.
So if there was an attack on a nation state's water supply, gas and electricity supply, banking systems, or all of those, it's essentially tantamount to the same sort of scenario that you'd be in if you had a war event anyway.
That's exactly right. They're getting at, the nature of war has changed. Yeah. The terminology we use to describe war hasn't. And that's basically the problem that we're facing right now as a market and as a, the bigger picture in politics. So we don't know how to define cyber warfare in a consistent way across jurisdictions. So we need to change the way we talk about things because the nature of war has changed to include cyber operations.
What are the benefits of the war clause? I try and put this into real layman's terms. Not having clarity between what is a war event and what is a cyber war event is a problem.
Correct.
Assuming that we have coverage for war events is a problem because we've never really had coverage for war events. Or we've never had coverage for war events in the cyber market. The burden of proof is higher than it used to be under the previous clauses. Mm-hmm. And the triggers that exist within that burden of proof, if met, are tantamount to a war scenario anyway. A country simply not being able to operate.
That's certainly the intent, yeah.
That's the intent. So, in your mind, what are the benefits?
Right. So if we look at the coverage litigation that came out of NotPetya, we know that, and those were property policies, but it's relevant, those are informative case, that's informative case law. We know that the definition of war is insufficient. It does not contemplate cyber warfare. So if the exclusions are left unamended, policies will have uncapped exposure to cyber warfare. And this is problematic because investors don't like infinite downside. They like to know that the downside is managed. So while we have uncapped exposure to cyber warfare, we're scaring off investors in this class of business. If we can attract investors to this space, we can have new insurers come to the table. We can have bigger limits offered. We can have
more competition.
Plainly put, more competition to help keep the marketplace competitive, pricing-wise, and also importantly, we get the limits profile that this class of business really requires. We get the significant limits that you see in the property market, for example.
So if I'm a buyer of cyber, mm-hmm. what might I perceive, bearing in mind that we're obviously saying that we feel that the current state of the LMA 5567B is appropriate and fit for purpose, mm-hmm. what might I be concerned that I'm not covered for, that I thought I might have been covered for before?
There's a lot of, seeing the trees and not the forest here. People are getting fixated on certain words being present in the language of the exclusions. What they don't necessarily see is that all of the words together have to exist for the exclusion to even trigger. So just because the exclusion mentions essential services doesn't mean any cyber attack against any essential service is excluded. Likewise, just because it says state-sponsored cyber attack, it doesn't mean any state cyber attack is excluded. Very specific cyber attacks by states are excluded when they impact essential services, and that results in the compromised state security or the inability of the sovereignty to function as a sovereignty. Their sovereignty is compromised. So again, these are really high thresholds, but it's unusually presented. So I understand that people are having a reaction to it because it's not showing up the way they're used to seeing it.
People don't like change.
People don't like change. But this isn't really any change. Really, all this does is increase the insurer's burden of proof to trigger the exclusion, but meanwhile manages that uncapped exposure to cyber warfare.
And it provides a lot of clarity around what is covered.
It does.
Let's take some examples. So
Great.
things that we all know and associate with cyber terrorism, with state-sponsored or state-backed malicious attacks. NotPetya, WannaCry, Sony Pictures, Colonial Pipeline, potentially. That's probably a bit more subjective, but it's still essential services, I guess. So those are all significant, systemic, exposed risks. Would they be excluded under the new clause?
Well, the really good and comforting news is that the drafters of the LMA clauses have told us that these clauses were drafted with the 2007 Estonia telecommunications hack, which has been largely attributed, but not formally attributed to Russia. The Estonia hack, the NotPetya WannaCry, as well as Sony Pictures, the interview, that movie, having been hacked, those were state-sponsored or connected to a state. The drafters have said these were specifically not going to either trigger or apply.
The exclusion is specifically designed to not prevent those scenarios from being covered.
Correct.
Okay. Whereas an example of something which would be excluded, but that would have never been covered necessarily in the first place, is Viasat.
Yeah, that's a really interesting case because we've been talking for so long about theoretical exposures, and Viasat actually gives us a working example. Now, we're not the broker on Viasat. All we know is based on what's available publicly. Just some background, Viasat is a satellite company. They have satellites over the border of Ukraine. A cyber attack was launched and took those satellites out within hours of the troop deployment by Russia across that border.
But the troops had been deployed before the attack.
We don't know.
We don't know.
Presumably they were mobilized to the border and then they mobilized across the border.
Yeah.
I would expect. I mean, I don't know.
I guess the part that I'm confused about with Viasat is it that, because it's not necessarily directly attributed, there was a war going on. There's no proof that the attack was specifically to, allow troops to move in effortlessly.
Correct.
But there was fundamentally a war happening at that time, or about to happen, or,
That's when it started. Yeah.
Right.
So
okay.
that's like the bookend or the starting point.
And so the war bit, I guess, is what I'm saying, trumps the attack on the satellite almost.
What it means is that cyber attack or that cyber operation, that malware, is connected enough to the deployment of the troops to look into, and would be a sort of reasonable standard for an insurer to say, hang on a second, the timing of this is incredibly suspect. We need more information. So not an outright declination of cover, but it would be enough for them to say, pause.
So we're not actually even saying that it categorically is an example of something that would categorically be excluded. We're just saying that's an example of something that happened where it's pretty closely linked, and we would expect it to be challenged.
I would expect it to be challenged.
Yeah.
And I think that it is being challenged. But again, we're not the broker, so we don't really know.
Whereas NotPetya, WannaCry, Sony Pictures, no challenge needed, clearly covered under those policies, assuming the policies cover them, they're not excluded.
Well, so Sony Pictures, not an essential service, attributed to North Korea, but there's no failure of the state, there's no compromised state security, wouldn't even trigger the exclusion. NotPetya and WannaCry, these took a faster timeline to attribute, so they were attributed, but again, the states were able to function.
Yeah.
So that triggered...
Even in the originating country.
Correct, yes. They were able to manage their way through it. Now, things were uncomfortable and businesses suffered, but the government didn't. And that's the material point, is that it can't trigger until the government has compromised its ability to function.
We know that NotPetya, WannaCry, Sony Pictures were all part of the architects of the clause's vision for what wouldn't be excluded.
Correct.
We know that our previous clauses were fundamentally war excluding war exclusion with a carve back for cyber terrorism. Cyber terrorism includes social, political, ideological motivated attacks. No mention of state sponsored.
No mention.
9 times out of 10, I can't remember seeing a cyber terrorism carve-back that did mention state-sponsored. So arguably, if you wanted to, you could say that NotPetya, WannaCry, Sony Pictures are state-sponsored attacks, and maybe our exclusion should apply. Now, in practice, that didn't happen, which I think is a really good precedent, and lots of claims were paid based off WannaCry and NotPetya. But we just don't even need to think about that now.
Correct.
Because the new exclusion simply wouldn't kick out those events.
It wouldn't trigger.
It wouldn't trigger.
So the issue with the other earlier unamended clauses is that they can trigger. They're subjectively triggered, which we saw through the coverage litigation coming out of the property market following NotPetya. The cyber market paid those losses because they had an interest in doing so, but they didn't necessarily have to. They could have hung up on the clauses the way the property market
Whereas
did.
they wouldn't be able to do that now.
They wouldn't be able to do that now because there's the application, the trigger is later.
Yeah.
You have to have that damage first and then the exclusion triggers.
And the state's essential services, security.
It has to be all of those. It has to be all of those things. Whereas the earlier ones, you get into the weeds of the language, and you might be arguing whether state-sponsored is covered. You might be arguing over the intent of the hacker. Was it really socio or was it really politically motivated? And then you also, everyone has the attribution problem. Yeah. So attribution is a bit of a red herring.
Yeah.
The real meat of the discussion should be over when the policy applies and when the exclusion can be triggered.
Yeah. So I think, broader, fundamentally, it's clearer, it's broader from a coverage perspective, or narrower, let's say.
It's a narrower exclusion. Let's be careful there.
Absolutely. It's very hard to see the negatives when what we're doing fundamentally is trying to create a sustainable, competitive, not overly exposed to systemic risk market that can deliver broad insurance solutions for our clients.
Yeah, and I think that there's some positives here. Is that look, this all started. The Lloyd's and the PRA came out and said that underwriters across the Lloyd's market need to manage their exposure to war and cyber war. So starting 2020, there was a phased approach of getting language issued to the P&C market, and then that slowly caught up with the cyber market. Last year, we had language was written in a way that our consumers weren't really comfortable with. And the positive story here is that the LMA listened and they evolved their wording to take out the more controversial bits without really undermining or changing any of the intent. They just made it a bit more palatable to read. And I think that that's a good sign that, look, changes can happen. What we can't have uncapped exposure to cyber war or cyber war-like operations. And we have a challenge in how you define cyber war-like operations, right? So Lloyd's has said, okay, what is measurable and what is objective? So what is measurable is, can the state function? Is it objectively state-sponsored? It's not any attack. It's not any attack against any asset, not by anybody. It's very specific as to who can conduct the attack, what assets have to be attacked, and the consequential damage that must follow in order for these things to trigger. So I think, ultimately we have a good body of information here, and we have a regulator in Lloyd's who's willing to approve amendments to this language as long as the sort of core intent is maintained.
I would be highly surprised if in a year's time there weren't followers to this process of clarity.
There are rumors of reinsurance changes coming down the pipeline that may force cedents into adopting language more closely aligned with what the Lloyd's intent here is as well.
Obviously, we're pro clarity, we're pro the new clause, and there are some questionable vagaries around the old war clause with the cyber terrorism carve back, so we're happy there. We've established that change is complex. Change involves, as a broker, reviewing old forms and new forms and advising your client that the new form they're moving to isn't going to reduce coverage in any way from what they had before. We don't feel that is the case, but what are the problems with this clause?
Yeah. So I think you've hit the nail on the head. I think the main problem is that it's change. And people always seem to think that when a change is coming from an underwriter, that it's some sort of coverage gotcha. You're not going to have cover. We're trying to get out of our obligations here.
I'm fairly sure that when the TCPA sublimits were introduced a few years ago, that was marked as an improvement, when in fact it probably was the opposite. So maybe
It's not necessarily a coverage gotcha. Yeah. It's a push for clarity, but the language used is unfamiliar to our audience. Yeah. So I think that people are objecting to the way the endorsements were presented, and certainly they're reacting to the press coverage of it, which is not
helping.
It's not helping. It's not nuanced enough, and it's making gross overstatements that state-sponsored cyber attacks are universally excluded, and that is very plainly not the case. So I think it's the main problem I see with these endorsements is the language that they're using and how it's being presented as opposed to the underlying intent. But even so, Lloyd's has shown great willingness to accept alternative versions of this, provided that sort of core intent is maintained. So that's positive. What we need to do is have a better understanding of that intent and make sure everyone's comfortable that it's not a coverage gotcha. This is actually a moment of progress. We're moving towards clarity. We're moving towards making us more interesting as an investment to alternative investors, which should ultimately mean the product is both more sustainable and more competitive, with hopefully bigger towers able to be built. My view on the exclusions is that the dispute will happen later, right? I think an insured, anytime an exclusion gets applied, will want to talk it out and make sure that exclusion was properly applied. And some of those conversations escalate into formal legal disputes. If you can trigger an exclusion on an event happening, as in the existing war unamended non-LMA clauses appear to allow, then you're going to be disputing sooner in the process, sooner in the timeline of that claim event unfolding. Whereas if you have to wait until there's a threshold of damage met where a government can't function, you're not even talking about the exclusion until much later in the timeline.
Yeah. Key takeaways from this discussion. Attribution, whether it's in or out, it's not going to stop a dispute from happening.
It is not, and it's universal for any exclusion, whether it's an EPL exclusion or a D&O exclusion. It applies to everyone, everywhere, every class of business.
So we advocate it not being in there if it makes it easier to read, but I don't think that's what we're hanging our hat on.
No, and actually, arguably, some insurers say including the language increases their burden of proof because it establishes that not only does it need to meet the standards acceptable to a court, but it also needs to meet the standards outlined on the page.
Okay. So we have attribution. We accept that change creates a difference and concern, but fundamentally, we do feel that the clarity that we get from the new exclusion not only more than likely ensures things that might have been excluded before are likely to not be excluded now, and that things that were categorically excluded before are still excluded now.
Yeah, I'd agree with that.
So the key takeaway is that everybody is focused on attribution, but really the trigger is what matters the most.
Absolutely. If the exclusion doesn't trigger, attribution isn't even a question. So the LMAs, it cannot trigger if it is not war or a cyber attack in the course of or preparation of war. It cannot trigger if any one element of the list I'm about to give you is not present. They can't trigger. It needs all three of these things to be present to trigger. So it needs to be by or directed by a state. Interestingly, they use language by or directed by. Directed by is a higher standard of proof than on behalf of. So that's, again, reinforcing this high burden of proof. So it needs to be directed by a state or by a state. It needs to be against critical infrastructure or essential services, not against a single entity operating within the space as a critical national infrastructure provider. It has to impact the network. And it must result in a significant impact to the ability of the state to function. People are focused, I think, on the material detrimental impact language, and they think it applies to a business or a business's ability to earn revenue.
If a state can't function, it's been materially impacted. It doesn't really matter what that definition looks like.
But it's the state that can't function, not the businesses, is, I think, an important conversation that needs to be clear. So if any one element of the below list isn't true, the state-sponsored element of the exclusion cannot trigger. It has to be by or directed by a state. It has to be against an essential service. And that needs to result in the state's inability to function or compromise state security. If any one of those three pegs isn't present, the exclusion cannot and will not trigger.
Lots to unpack here, and hopefully it makes the clause clearer. Hopefully there's some learnings in here that are of use, and hopefully it demystifies some of the problems that have been talked about at considerable length in the trade press. If you have any questions, let us know.